All of the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Good morning, traders and investors around the world, and welcome to Tuesday's edition of premarketinfo.com, where we prepare you for the most important hour of the day, the first hour. Dennis is still a little bit under the weather, so I'll be flying solo again. Taking a look at the S&Ps, the overnight activity, we made a high early in the session at 1365.75, just over the close. Ensuing sell-off took us down to 1351.75, which happens to be the target on the downside since 9-day average range is 14. The market is still sitting above some major support here. Our 8-day low at 1350 and a quarter. That will be the key level on the downside this morning. Coming back on the upside, good resistance will be at 1358. That's Monday's low, and that also coincides with the mid-range on the day. Moving on to the Big Ten, ExxonMobil currently trading down 56 cents in the pre-market. Matched Friday's low, 85.85. Friday's low yesterday, it got to 85.91. That is critical support here. We're still 50 cents away from that level. Look for a bounce off that initial 86 level the first time. Below that level, let's look at 84.92, which was our low on February 17th. Coming back on the upside, resistance will surely come in at the close at 87.01. Apple Computer, big sell-off yesterday after a very tight range on Friday. The close information that I can find out is that a block trade of 17,000 shares was the catalyst for that decline. Someone actually showed an order of that size. The dark pools and HFT traders got ahead of it, whacked it down. 526 was the print. That coincides with the 5-day low of 525.85. Critical support this morning in Apple, currently trading down $4. If in fact that 526 does not hold today, Apple could be in for a whole lot of trouble. Coming back on the upside, 533.16, that's the close, that's the mark, that's where people will be looking to get out. That will be your first resistance point. Above that, 530.570 should be a good place to exit some longs or initiate shorts. Moving on to our next component, a tech stock that did the exact opposite of what Apple did, making a new all-time high yesterday, busting through the $200 level, closing at 200.66, the all-time high at 201.19. We are now trading down $1.17 in the pre-market, so look for that initial resistance to come in at the $200 level, as some folks say, shoot, I should have sold it at 200 yesterday, and then 200.66 was the close. Coming back on the downside, we are still over $1 away from Monday's low at 198.30, so that should be our first level of support. Moving on to our next component in the Big Ten, Chevron Corporation, still managing to trade in a very tight range. Did take out that support yesterday at 109. It traded as low as 108.14. Did manage to recover on the close to settle at 109.32. Currently trading down 82 cents in the pre-market. Let's keep an eye on that 108.14. Sure looks like it's going to get a test early in the session for support. Below that, we are looking at the 8-day low at 107.20. Tech stock ready to follow the theme of Apple more than IBM. Microsoft just didn't hang out at Friday's low at all, that $32 level. Sold off, made a low at 31.62. That coincides with our 4-day low at 31.61. Currently trading below that in the pre-market. So now that 31.62 level will act as resistance. If in fact it could clear that level, 31.80 the close should be met with a lot of offers. Microsoft sure didn't spend a lot of time in that 32 handle. Coming back on the downside, you got to look at minor support at 31.38, but the major support comes in at the 5-day low at 31.10. Moving on to our next component, GE. GE does not bring good things to life. Couldn't get back over 19 yesterday after flirting with that level for a couple weeks. Finally broke down. Friday's close and Monday's high right there, 1897, 1898. Doesn't look like we'll see that today. So let's use Monday's low as resistance, 1873. Of course, if it gets through there, let's look at resistance at the close at 1885. Major support at this 1850 level. I'm sure see some big bids in there at the first time down. Look for support at 1850. Procter & Gamble still teasing momentum traders and breakout traders here. Everyone looking for it to crack the 66.40 level. You have 5 lows between 66.40 and 66.54. Take a look at that on the chart, folks. That's a pretty rare formation. Only trading down 39 cents in the pre-market, so you still have to use that 66.40 as support. If it does take that out, we're looking at the 6-day low at 66.13. Coming back on the upside, here's a stock that closed right near its high of the day, 66.95 close with a 97 high. So if in fact PG can mount a rally, major resistance now comes down to the $67 level. AT&T continued its march, got above 31 for a little bit, made a high at 31.11 before peeling back to settle at 30.99. You still have to use that whole 31 handle. Anytime this thing gets into 31 handle, you got to expect some kind of resistance. Now that we're trading down pretty substantially in the pre-market, 30.99 the close would be our major resistance. Getting close here, Monday's low 30.75. I'd use that as a minor support area, perhaps cover short. I don't know if I'd initiate a long at that level, but the 2-day low at 30.60 should be better support for AT&T. J&J only trading down 19 cents in the pre-market. Still lingering in this range that we've been talking about forever and a brother. Closed near the high of the day, as did Procter & Gamble. 64.95 high, 64.91 close. So resistance is coming down to that $65 level from 65.26, which was some of the highs we had in the middle of last week. Pretty much matching lows here in J&J at 64.54 to 57. If in fact that is taken out, we're looking for the 6-day low at 64.02. Our final component here, Pfizer Corporation, still just meandering here in the in the lower 21s. Did manage to get to 21.58 yesterday. That was 7 cents shy of Thursday's high and the weekly high at 21.65. Opening into support here, Friday and Monday's lows at 21.32 to 36. We are opening into support. If in fact that level is taking out, we're looking at the 3, 4, and 5-day lows from 21.03 to 21.06. S&P is really not getting a bounce here as of yet. 1251.75, our target on the downside for the day, still holding up. You got to be careful of that 1250 and a quarter level, which was our 8-day low. Going to take a quick break and post our market movers, and we'll be right back with you.